Good morning. We will pay attention to the difference between the periodic and perpetual inventory system today and how the recording of transactions will be different in the two inventory systems. You must remember that only your inventory and cost of sales is affected by the two inventory methods. All other entries that you record will be done exactly the same whether you use the periodic or the perpetual inventory system. If we look at sales, in the periodic system, you will only have one double entry for the sales price. You will therefore debit the bank, credit sales, or you will debit debtors control, credit sales, and there will be no entry for cost of sales, because in the periodic system we don't use a cost of sales account and we don't write in the inventory account during the financial year. In the perpetual system you will do two double entries, one for the sales price of the goods and one for the cost price of the goods. So you will debit a bank or debtors control and credit sales, debit cost of sales, credit inventory. When goods are purchased, you will debit the purchases account in the periodic system because you are not allowed to write in the inventory account. In the perpetual system, you will debit the inventory to increase your asset. If goods are returned to the creditor, in the periodic system, you will credit the creditor's allowances account and debit the creditor's control. In the perpetual inventory system, you will credit the inventory account and you will debit the creditor's control. So if you look at the difference between these two, you see that both of them will have a creditor's allowances journal. But in the perpetual system, when you increase or decrease inventory, you will record it in the inventory account. Because we are not allowed to write in the inventory account when we use the periodic system, you will have a creditor's allowances account. In the perpetual system, you will never have a creditor's allowances account. If the debtors return goods, only one double entry will be completed for the sales price of the goods if you use the periodic system, because we don't use cost of sales, and when goods are returned or when you sell goods, there's no cost of sales account. In the perpetual system, you will have to do two double entries, one for the sales price, so you will debit debtors allowances, credit debtors control, and you will do an additional entry for the goods returned at the cost price, and you will show that inventory increases when the goods come back and the expense for cost of sales will decrease on the credit side. When carriage on purchases are paid, in the periodic system, you will debit carriage on purchases, or if you pay import duties, you will debit import duties. In the perpetual system, any expenses that you pay when you buy goods will be debited in the inventory account. If we look at the cost of sales account, you will not have a cost of sales account in the periodic system, while you will have a cost of sales account in the perpetual system, because every time when you sell goods on credit or for cash, or the debtors return goods, the cost of sales figure is calculated to show what is the value of the inventory that is returned to the business and with how much must cost of sales be decreased. Inventory shortages, you will complete no entry in the periodic system, because the closing inventory will automatically lower. When you do the calculation for cost of sales, it will be absorbed by the cost of sales figure. When you use the perpetual system, you have to credit the inventory account to reduce the balance of the inventory account to the amount of the actual inventory that is available at the end of the year. If we look at the sales transaction, when goods are sold for cash, 200, and there's a cost of sales figure for 90 Rand. If we complete the perpetual inventory system, we will show in the cash receipts journal the amount received in the bank is 200. In the sales column, you will indicate 200, and in the cost of sales column, the 90. When we do the periodic inventory system, we will not have a cost of sales account column. We will only have a bank column and a sales column. When we transfer the information from the journal to the ledger, you will debit the bank with 200 and credit sales. In the periodic system, you will also debit the bank and credit sales. In the perpetual, you have to do a second double entry to indicate what is the expense for cost of sales to be able to sell the goods and with how much was the inventory decreased. In the periodic system, because we don't use a cost of sales account and we are not allowed to write in the inventory account during the financial year, there will be no entry for cost of sales or inventory. If we look at the effect on the accounting equation, when we sell goods, the bank receives money, so the assets will increase with 200. The equity sales will increase profit, so the owner will get a bigger profit. So equity increases. Cost of sales will decrease the profit with 90, and the inventory will decrease with 90. In the periodic system, we will only have one effect on the accounting equation, and that is for the sales. So we will show that the assets increase because there's more money in the bank. The sales will increase the profit, so the equity will increase. When goods are purchased by check, so we pay for it immediately, the entry will be recorded in the cash payments journal. In the perpetual system, we will record it in the inventory column because we use the inventory account during the year, and we will show that it is transferred to the inventory account on the debit side to increase the asset, and the bank account is credited with the 4,000 to decrease the amount in the bank. When we use the periodic inventory system, we are not allowed to write in the inventory account. Therefore, we will write in the purchases account. So the purchases account will be debited with the 4,000 and the bank account will be credited. Therefore, there's a difference in the effect on the accounting equation because inventory is an asset. So assets increase with 4,000. Purchases is an expense, so therefore that will decrease the equity. When goods are sold on credit, it will be recorded in the debtors journal. So there's a difference between the debtors journal in the perpetual inventory system and the periodic inventory system. In the perpetual inventory system, you will have an additional column for cost of sales that you will not have in the periodic system. So when we do this entry, I will show that the debtors increase with 8,000 and that my sales income increases with 8,000. In the periodic system, I will do exactly the same. I will show that the debtors asset increases with 8,000 and sales income will increase with 8,000. Now, in the periodic system, you don't have to do the second entry, where in the perpetual system, you also have to record the cost of sales. So therefore, I will look at my cost of sales figure, 5,000. I sold the goods, so cost of sales expense must increase on the debit side. We've taken the inventory from the shelf, so my total inventory decrease with 5,000 on the credit side. If we look at the debtors allowances journal, then we see that there's also a difference because the debtors allowances journal in the perpetual system will have a cost of sales column, where in the periodic system it doesn't have a cost of sales column. So we will credit the debtors control because they decrease with 800, and we will debit the debtors allowance account with 800 because there is a reduction in my sales. So my sales will be reduced by this debtors allowances. In the periodic system, we will record the 800 and show that the debtors decrease with 800, and we will debit the debtors allowances. In the periodic system, we don't have a cost of sales column and we don't record cost of sales. In the perpetual system, we will have to show that the cost of sales expense decreases with the 500 because now these goods are not sold, and I will increase my inventory with 500 rand. When we look at the effect on the accounting equation, we will see that when we sold the goods, the assets increase because the debtors owe us more money. Sales will increase the profit, so the owner will get more profit, so equity increases with 8,000. In the periodic system, I will record the same entry. Then in the perpetual system, I will have an additional effect on the accounting equation as a result of the cost of sales. The inventory decreases, so my asset decreases with 500. My profits will reduce with the cost of sales figure, so my equity decreases with 500. If we look at the returns by the client, we will show that the debtors owe less money, so assets decrease. The debtors allowances decreases the income out of sales, so it means my profit decreases, so my equity will decrease. The same transaction will be completed in the periodic system. But then in the perpetual system, in addition to the entry for the sales, you will have this entry to show that the inventory was returned to the business. So assets, inventory increases, equity will increase on the credit side. When goods are purchased on credit, in the perpetual inventory system, in the creditors journal, we will have a column for creditors and inventory. In the periodic system, because we're not allowed to use our inventory account, it will be recorded in the purchases column. But when we transfer this to the ledger, the creditors will increase with 7,000 on the credit side, and inventory will increase assets on the debit side. In the periodic system, the creditors will still increase with 7,000 on the credit side, but now we're not allowed to use the inventory account. We use the purchases account, so therefore we will debit purchases with the 7,000. If goods are returned, we will record it in the creditors allowances journal. So we will show that the creditors decrease with 1,400 and we send inventory back for 1,400. In the periodic system, we are not allowed to write in the inventory account, so we will open an account creditors allowances. Therefore, we will reduce the creditors on the debit side and we will decrease inventory when we use the perpetual system. In the periodic system, we will decrease creditors allowances. So creditors allowances will actually decrease my total purchases. In both methods, you have a creditors allowances journal. The difference is that in the perpetual system, we will record the entries in the inventory account when it is reduced. So we will credit the inventory account to show that the amount decreases. In the periodic system, because we are not allowed to write in the inventory account, we have to open an additional account for creditors allowances. You will never have a creditors allowances account in the perpetual inventory system. If we look at the effect of these entries on the accounting equation, first of all, when we bought goods, in the perpetual system, we increase assets because inventory is an asset, and we increase liabilities to show that we owe more money. In the periodic system, purchases is an expense. So expenses decreases profits, therefore the equity will decrease. We owe more money to the creditors, so liabilities will increase. In the returns entry, we will show that we return inventory, so my assets decrease. I owe less money to the creditors, so I will decrease my liabilities. In the periodic system, I owe less money to the creditors, but creditors' allowances has an effect on purchases. So what we are actually doing is we are reducing the expense for purchases. If the expense decreases, my profit will go up, therefore the owner's equity will increase. Entries that is recorded in the General Journal. The owner took goods for its own use. So in the perpetual system, we will show that the drawings is debited and we will credit inventory. In the periodic system, we will show that purchases, the expense for purchases will be credited. So we will debit the drawings and we will credit inventory with 100. In the periodic system, we will debit drawings and we will credit purchases, so the expense of purchases decreases. If we look at the second entry, donation of goods, so donations will be debited, inventory will be credited. In the periodic system, we will credit purchases. So when we record this entry, we will show that the donations account is debited with a 50 and the donations will reduce the inventory asset with 50. In the periodic system, we will show that donations on the debit side increases and purchases expense will decrease as a result of the donations. When we take some of the inventory to use in the business for stationery or advertising for any purpose in the business, the expense account will be debited and inventory will be credited. In the periodic system, the expense account will be debited and purchase must be credited so that the purchase's expense will decrease with a 400, where in the perpetual system, the inventory will decrease. If we look at the accounting equation for drawings, the assets decrease because we have less inventory, and then the drawings will reduce the equity. In the periodic system, you will show that the drawings will decrease the equity. Now, because you've taken inventory out of the business and the purchases account is credited, it means that purchases expense is decreased. When expenses decrease, you will increase your equity. So for all three of these, you will see that the assets will decrease, and in the periodic system, you will show that your profits will actually increase as a result of this transaction.